Stuart here again. We're 20 minutes from the US Open, but some key data out of Europe this morning, and it's also obviously key month-end day as well. It's end of the week, and it's Friday end of the month as well. Interestingly, here this is the euro. Let's just see who's in here today. We've got. There we are. It doesn't need to be connected. Actually, looks of things. Hang on a sec. Okay. No, it's running. That's okay. We've got an interesting reversal here for the euro dollar. Here we had a very strong first quarter, and certainly a very strong March. As we see here, we declined quite significantly a bit yesterday. We recovered all of that March decline. Here on this candle here earlier in the week, not yesterday, earlier in the week, it was on Wednesday, wasn't it? When we broke over this 121 area here, this big thick line here, and we're back under there at the moment. Some profit taking going on after a strong month, but we're 3% up from our opening day on April, so strong recovery for for the euro dollar in April. So just bear with me a second. I just need to find another site if we can. For some reason the stream key is not working. But Emma, good afternoon to you. If there's anything you want to have a look at, anything particular, please let me know. Hope you're well. And good evening. I say good afternoon here from sunny Cyprus. Ebony, good morning. The other part of the world, the other side of the world. I hope you're well. And again, anything you want me to have a look at, let me know. But I just want to run through the main daily charts for the main cross and see how the dollar's sort of suffered again, as you can see very clearly in this euro chart during April, and what we may be going forward to in May. Remember. We had this very, for me on Wednesday when the Fed came out with its very dovish call, I was expecting a bit more sort of pops news about, not necessarily news about tapering, but some sort of indication that may be on the cards, it may be on the table. Remember, earlier in the month, we'd had this it's a bit of a surprise announcement, but for many, or for most, from the Bank of Canada, talking about tapering. They tapered by 100 million Canadian dollars a month, so it's a significant 25% reduction in the taper in Canada. No sign of it happening anywhere else. There's a bit of a gossip that the Bank of England may, at their next meeting in June, bring it on the table, but we'll see how the recovery continues in these key developing markets. Remember, the US and the UK in particular are doing very well with their vaccination rollouts. Other parts of the developed world obviously not doing as well, and obviously it's very, very early days in the middle income and low income countries, particularly that middle income country, India, suffering very badly from new cases, unfortunately, as that variant runs through that country quite badly. So dollar, as I say, week at April here, euros up. Let's have a look at some of the others. Dollar yen, I will come back to dollar yen in a minute, but cable also had a strong, let's go to the daily, also had a strong April. Perhaps not obviously not as a big down and up we've seen in euro. This is the March area. We descended here from 142 at the end of February down to 137 at the end, towards the end of March, and then we've recovered and rejected the 140 level in the middle of the month. We've moved back down, but we're still supported above 138. We're still holding 139. We were earlier today. Big down day today for cable traders, rejecting that mid 139.50 so far today. So again, another one that's really, it's had a strong run, sterling, or it did have a strong run, and we're sort of channel bound at the moment. So this top here, 138.950, 140 rejected quite significantly when we move down, but we don't want to go under 138 as we move into May for cable. John's asking about Euro New Zealand. John, I'll come. Let's actually let you're the first to actually ask anything. Let's come to that. We'll come back to the other majors in a minute. Euro New Zealand. Any particular time frame, John? No, I thought euros weakened a tad here daily, very much sideways action here. John, I don't know what time frame you're trading that. But significant support here, 166.82, 85, say. So we got 1, 2, 3, 4, 5, 6, 7, 8. 8 days out of the last 10, we've tested this support here at 166.85. Doesn't want to go under it. Doesn't want to go over the 50-day moving average here on the daily basis, which is R1 at 167.65. So it's very much an oscillating trade, John. I don't know how you're trading it. But let me see if I've got any questions from Facebook as well. For some reason, Facebook doesn't seem to have connected for me. No, why isn't that? Oh, that stream hasn't worked. But anyway, 4 hour you're saying? Okay, so well, clearly you can see the channel there, sideways channel there on the daily time frame. If we zoom that in a bit for your 4 hour, and again that's been holding really all of April, hasn't it? A big fat support there. So 4 hour, what's 4 hour telling us? Well, again, you see it's an exaggerated move of the daily time frame, but there's a bit of a falling wedge there for me. For the month, really sort of dripping down there. The 4 hour 200 period moving average sits there at 167.60, so that should top. But it doesn't really, as you can see there, John, hopefully, it doesn't really want to go over that blue line, that which is the 50 period moving average. It's been over it, closed over it for one candle so far this week. Hasn't really wanted to do that much, but it's got a bit of a rising, bit of a sort of support there as well. It's really on the 4 hour from that key daily support down here. So 4 hours a bit tighter. We got a bit of support there. So again, you could, that's our downtrend here on the daily time frame. Let's go back to the daily here. Down, that's our downtrend. But you can also see here on the 4 hour. Let's go to the 4 hour. A bit of a triangle forming there. So 4 hour, where's the next action going to be? Well, we need to break the 50 hour moving, with a 50 period moving average there, John, at 167.40. Above that is the 200 period moving average, and our trend line break at 167.60. So 167.40, 167.60, two key lines to the upside. Support into the end of the week, really now, or even into Monday as well. We've got the pivot point there at 167.20, which is our cross. So that's where you'd want to extend that. So I'll move that back. You can see potential some breakout, but extend your trend line up. But it's not doing a great deal. It's sort of, again, it's zigzagging around. That low is low. The new low was here. When was this? This was this morning. Yesterday. Low. So a bit of profit taken perhaps into the month end. But it's obviously a few more candles to go before we start again on Sunday night, Monday morning. So that's the one to watch, certainly on that 4 hour chart. John, Emma, dollar index. Let's go back to the other key. Where's my dollar index? The other key chart. We were down. We've been dollar. I was going to come to the majors. Dollar CAD's at a 3-year low. Euros at this 2-month high over 121. And certainly dollar index, we go to the just to our intraday chart here. John, that's not a problem. Just watch that really. That's key. Just watch that really, John. It's a key sort of little triangle forming there. That looks things on that 4 hour time frame. Emma, 4 hour. Again, I don't know what time frame you're looking at. But if we go to start the daily with the dollar index, let me take this up to the daily. Zoom that in a bit. Again, another great example of the weaker dollar for April. So we had a really strong March. This is March here. This is the daily time frame. So we were sort of edging up during January and February. Our February high here. I'm going to come back to that in a minute. It was 91.50. Breached through that at the beginning of March, and then we rallied all the way to 93.45. Couldn't get to 93.50, and as April turned, we just we continued to decline, and it's been down ever since. So, as an end of day trader, you've just been tracking this lower all of April. Again, a bit like we saw on the euro. No surprise there, because remember the euro accounts for 60% of the weighting of the dollar index on this one, Emma. You're saying the 4 hours your time frame. So that's your downtrend on your daily time frame. So your 20-day moving average is all the way up there at 91.44. Your daily 5-period EMA is around the R1 today at 91.80. So your 4-hour trading time frame is what you're looking at, is edging still, as you would expect. The daily is in such a big downtrend. The 4-hour doing the same, a bit more loopy as we're going down, but certainly the trend is low as you see some big candles as we've moved down. So the highs, as you can see here, highs here getting low. I was putting that on the wrong screen, and the lows getting low. So the trend remains down. We've got a bit of a cup and handle forming. Then we move down, cup and handle forming. So are we going to get back to 91? We're capped under 91, as we have been most of the week. So we've got a floor at 90.50. We've rallied up. That's against the trend very much so in this current hour. And again, it might be just sort of profit taking on the big monthly move. So into the end of the day, strongish candle here this morning, the 11 o'clock to 1500 hour candle here over the pivot point. It's broken the pivot point through, so it looks like it's moving up, but big resistance sits at R2 at 90.96, Emma, and then the big round number just 4 ticks above that at 91 itself. So that looks relatively positive into the end of the day, but be careful. We could again if you want to, like we did with John earlier, you put your little downtrend on there, your trend line. We're over that trend line now, you could argue. It's not a great trend line drawn. So we've broken through that. That might be a support to come back to move up again. But that's, technically, if you're trading this with this particular strategy on the 4-hour, it's broken over the 20-hour. The 9 and the 5 period moving averages have crossed, so it's gone long. But as you say, every other time it's gone long, it's come back down. It's gone long, it's come back down. It's gone long, it's come back down. And it hasn't there all the way back to April the 9th. So be careful of that against the trend long position there, Emma. Best of luck if you're taking that long. No problem. John, maybe you also take us through what you're watching out next month. Yes, that's the whole point of today, really. But as you come and request things, I'm happy to default away. Obviously, let's start with next week, shall we? Obviously, the top of the shop next week, John and others, is the non-farm payroll data. Expected, some are talking about it could break the million jobs level, 750,000. Yes, seriously, they are. Yes, 750,000 for ADP. Let me just check my calendar there. That's my calendar. ADP on Wednesday is obviously before that. I should have got my calendar out. There we are. It's taking a while to come up. Okay, so yeah. And the other key events next week are the probably normally key events, but probably not. It's the Bank of England and the Reserve Bank of Australia, the RBA and the BOE. Also got rate announcements next week, Tuesday and Thursday, respectively. We've got retail sales out of Germany on kick things off on Monday. We got obviously it's the first week of the month, so we got the key PMIs. We got market and ISM PMIs. We got US ISM on Monday. 65 is expected, so continue recovery. Trade balance ahead of the RBA on Tuesday. As I say, New Zealand jobs data, unfortunately, it comes out quarterly, the New Zealand unemployment data. Unemployment is expected to bounce back up, unfortunately, in New Zealand. What's the number? I've lost it. Yeah, 4.9% from, 5.6% I've seen on some calendars from 4.9% last time. So let's see if that actually transpires with the numbers next week. They may get updated before the data comes out on Wednesday over the weekend as well. So 750,000 where I started was the ADP number for Wednesday, ahead of non-farm payroll on Friday, which I say expected 925,000 on Friday. So quite, the million number is more than attainable. If there's the follow through that we're seeing on the weekly claims as they've come down under that key 700,000 level, the 500. They missed a bit again yesterday, but it was only 20,000. Still at the 535,000 level, so that's come down quite significantly on a weekly basis. And remember, the NFP, the week that the Bureau of Labour Statistics take it is the week before, so it was still relatively high that week. But as I say, the million number for the NFP on Friday is not out of the question. So see what happens with that one. Sargent, what's 8? I don't understand what you mean, my friend Sargent. That's next week. And the other thing, obviously, we're in the breach of earnings season as well. We've had a very strong week this week. The big hitters of the tech market and everybody's, I'm saying everybody, lots of people's favourite companies. Amazon reported yesterday, big knockout out of the park numbers. Apple's numbers were very, very strong. They were up 3% after hours. They actually closed down yesterday because a lot of the attention is perhaps, well, these numbers were so strong. 2021 is going to be a strong bounce back for Apple. But remember, the analysts and the market looking forward at least 18 months. So they're into 2022 and they're thinking, can 2022 be as good as 2021? It's obviously not going to be because of the big shock we had in 2020. But at the moment, so we ended flat basically for the big knockout of the park numbers we got from Apple on Wednesday. Facebook, again, another one that was up 7% after hours on the initial numbers coming out. Very strong numbers from them. The number that really grabbed me this morning when I was looking at the Amazon numbers was the ad sales. Ad sales are up 77%. You don't think of as Amazon as a major consumer of advertising revenue, but it's a huge number. Obviously, they're getting people onto the site. They're getting people buying, which is their core retail side. Obviously, they've got their AWS cloud service, which has done remarkably well over the last decade or so. But really, ad sales, you really don't expect that. So clearly, there's some sort of traction there that's going on with people on the site, being attracted to the site, and those ads are obviously working for such a big bump in their ad spending, or people spending ads on Amazon. So the big hitters, the big market cap companies, 50% of the market cap of the S&P 500 has now reported with these big tech companies this week. Microsoft's also early in the week. Tesla, Twitter also reporting this week as well. So all with very strong numbers. The banks continue to perform very well. HSBC reported this week. Standard Chartered, UK based but very much Asia focused, also had some good numbers. NatWest, the old RBS, they had good numbers as well this week, first quarter earnings. And today is the integrated oil companies. We got Exxon, Chevron, AstraZeneca reported overnight, the big pharmaceutical company, obviously very much in the news with its vaccine and other developments. All of the news not always positive, but they've done very well, and it's very popular simply because of the price. As with anything in the free market, the price of the AstraZeneca vaccine, as effective as many of the others, but much cheaper, and therefore in great demand globally. So earnings, can they go from there? And your point, John, is really what's going to happen in May. Well, typically May is there's the old adage, sell in May and go away. It's the start of the weaker 6-month half of the year, if you like. November to April, that 6 months is traditionally and always has been, and still it was again this year, a very strong 6-month period. The following 6 months, May through to October, tends to be a bit more flaky. We get the summer season in the Northern Hemisphere. We get the notorious September and October sort of area as well of volatility. So we'll see where equity markets go. But just on equity markets, what we've got here, let's look at the USA 500. It's had a very strong. And this is February. Where's my March? Oh, there it is. I can't see. Why isn't that? That's January, that's February, that's March. I can't see where's my April tick off there. But as you can see, we've had a strong March and April, basically. It's the point here. You can see strong all-time high again yesterday. I can't remember how many all-time highs it keeps pushing out. But if you look at the chart here, you can see consecutive, these are getting higher. These are consecutive all-time highs. What on April? the S&P 500 has had. Remember, the S&P 500 is the most significant because it's the biggest. Lots of people get excited about the tech companies of the Nasdaq 100, and the Dow's done. As investors have rotated out of the high growth tech companies into the more stable financials and utility type companies, and the energy stocks in particular of the Dow, that's done well as well. But all three key US equity markets all posted new all-time highs during April, and that is set to continue really. Although you could argue there's a bit of cooling as the candles have cooled here in this last week of April, and we're on a down day today. But again, follow the trend. We're still above the 5-period daily moving average. The 9-period moving average sits there at 41.74, and the key 20-day moving average, which is like the sort of the monthly average because it's 20 working days, and that sits around the 4,145 level for the S&P 500. So still well bid, still rallying up. And if you go up to the higher time in the weekly, the weekly is comfortably moving up. But as you can see, the last 2 weeks of April, a bit cooler than the last 2 weeks of March and the first 2 weeks of April. So as we come to the end of this 6-month period, are we cooling down? But at the moment, it's still well bidden on a weekly basis. That 20-week moving average is all the way down there at 3,900. So equities remain quite well bid as well. And for some reason, my Facebook video doesn't seem to have started. It's something obviously I've done wrong, I think, when we set this up. Let's have a look. I can't see anything. No. Oh dear. That's what happens when you leave me alone for the day. Things go wrong. But never mind. There's some of you here from YouTube, so that's good, isn't it? Brandon, good afternoon. Hope you're well. RJ, I don't know what you mean, 8. Is that 8 for great or just 8 for 8? I don't know. Anyway, what was I saying? I was talking to John, wasn't I, about the markets, index markets. So they're up, and let's come back to these one. We're going to start before a review of the major pairs. So this is the yen against the dollar. So dollar yen here. Again, another one had a strong February, strong March, and we've turned around again, not as aggressively as the euro, but yen dollar has come down against the yen. We were touching within a smidge of 111 here towards the end of March. We're down, struggling to get over 109 now, so big move down. We went under 108, 300 pip decline for dollar yen during April. And we've bounced a bit, but we can't. The resistance currently, as we move into May, is 109. That's a key area as we're going forward. Here, this is the daily time frame. You see, we're still struggling with that 20-day moving average. We're sort of birched it a bit today, but is it just month end tidying up? We shall see. So the trend remains down. Move up from this 108, sub 108 move we had in this. So we've had a relatively good week for the dollar against the yen this week. Where will we end and where will we start May? But it's still, that's the key support, that's the key resistance. So 300 pip range from March and April going forward for dollar yen. Sterling, as I said earlier, I can't remember now, from sterling. We rejected we did sterling earlier, didn't we? We rejected 140 earlier in the month. But we don't want to go under 138, particularly for the second half of April. 137 was tested at the end of March and here at the beginning of April. So we're up above that. So 138 is our resistance. 138 is our support. 140, I should say, is our resistance as we move into May for cable rate. So again, another quite a fairly chunky 200 pip range. Kiwi and Aussie, on the other hand, are benefiting from this big rally we've seen in the commodity indexes. Commodities indexes are really strong. We've had new all-time highs today on palladium. Palladium went over $3,000 for the very first time ever today. Copper's very well bid. It's at 4.50 last time I looked this morning. Also well bid. Gold's sort of meandering. Silver's still around about $25. But still very much on the bid. These big industrial metals, palladium, platinum, very much in demand, as particularly the Asian markets, China moves forward. The economic data is moving forward quite aggressively in the United States as well. We got this massive stimulus package, big infrastructure spend and tax and spend plans from President Biden announced on Wednesday as well, adding to sentiment. Adding to some of these big green companies as well. So the solar panels, which is why copper's in demand, palladium, electric cars, electric vehicles, not just electric cars, but the greening of the global economy. Whether it will come to fruition or not, we shall see, but one would hope so. But anyway, Aussie, again, capped at 78. Again, this is the daily basis on the Aussie for... hang on, that's the wrong time. That's the 1 hour time. That's what I'm talking about. 78. There we are, 78. So again, this is on the daily time frame. Another strong month for the Australian dollar, bouncing back against the US dollar, but needs to break over 78.78 if we're going to go higher. And again, another support there at 77. So Aussie has a big, 100 pip range, as does the Kiwi here on the daily basis. I don't really trade the Kiwi, but remember the Kiwi, quite attractive for carry trades. Still good interest rates in New Zealand. Looked like it was moving under .70, but found support on the weekly time frame. Looked like it was going to go short, didn't happen. And we've turned around 250 pips from that breach of 70 here towards the end of March. So again, another one's had a strong April as the dollar's continued to weaken. Another one's over its 20-day moving average here from the middle of April, and it's continued to move up. And 73 is the next line in the sand for Kiwi traders. The big one that's really benefited from this surprise from the Bank of Canada is the Canadian dollar. So we got a perfect storm here, particularly over the last couple of weeks for the Canadian dollar. It's got the daily time frame, as you can see here. Big move down in the last few days. What's going on? Well, we had the surprise from the Bank of Canada announcing a reduction in their quantitative easing of 100 million Canadian dollars a week, in fact. So it's a big move down. So here for April, March was drifting lower, but we were still playing with this 125, 126 level at the end of March and most of the beginning of April. The big down day was here, as we actually reversed significantly from the breach of 126 the day before to a breach of 125 that day. So big engulfing candle here as the Bank of Canada announced on the 21st there, and we've just ratcheted down very significantly from there. So 125 gave way, 124 gave way this week, and we're under 123 as we close out April. So a huge move for dollar CAD. We've got, as I said before, we've got the commodity complex on a bid. Oil has had an upgrade from Citi and Goldman Sachs this week. Expectations for demand and prices for the second half of 2021. It was sort of expected as the economies were opening up, but dollar CAD particularly benefiting from this combination of a much more dovish Fed this week, a surprisingly aggressive Bank of Canada the week before, and then this continued rally in the commodity complex. So a bit of a perfect storm there for this particular pair. And again, that's one that's just huge reverse on that day, and it's continued to unwind. A huge 300 pip plus move from plus 126 to under 123 for dollar CAD, and that looks going forward. If you look at the weekly time frame, that's just another. It's a big week down this week, but it's just another one. It's the fourth consecutive week down for dollar CAD, having rejected this, and this continues to trend lower. So if we zoom in, you see where we're at. This 3-year low here for dollar CAD, all the way. That's off the chart here. Zoom that to the monthly. This is the monthly. Sorry about all the lines, but this is obviously a 1 hour chart on a monthly basis. You can see here all the way back here to this area here in 2015 could be tested if we break low where we are now. So you can zoom that up. You can see that big 200 period monthly moving average has been breached this month on that big move, that 300 pip move we've had this month down for dollar CAD. So and it's a significant breach below that. So look at these So if we zoom in again, I'll zoom out again, we go back to these levels where we are now, takes us all the way back here, takes us all the way back to this area here at the beginning of 2015, May and April 2015. And those months we went as low as 120.65. So the pressure, perhaps dollar CAD, remains very much to the downside, and the Canadian dollar, if the best of the big currencies against the dollar, certainly so far this year. Ebony, what's that you're asking? What time is it in your time zone? What time is typical most active for the London session? Ebony, the London session, well, where I am now, it's 20 to 5, so it's 16:40. So server time is 16:40. That is 2 hours. Let me just make me a bit bigger. You can't see me, can you? That's 2 hours ahead of London time. So London, it's just gone 2:30 in London. The whole London time frame, basically, from sort of 8 o'clock till 4 o'clock, or 8 o'clock, or 6 o'clock, London time, can be quite active, particularly the 4 o'clock. 1600 hours in London is particularly active time, that closing of that hour as we come to the end of the London day. It's also something happens there called the London fix, which is when interest rates on the daily basis are agreed at that sort of time in the London time frame. So if you're an intraday trader, if you're a scalper, certainly the London session is the one to be looking at. Now is obviously a good time. The New York session is open, so we've got that overlap now as New York is open, the US North America session is open, New York, Canadian markets are open, London markets open. But obviously today, be careful. It's the end of the week, Friday, which can be always a bit of a roundup. People balancing their books for the weekend, taking risk off the table. Don't want any news announcements scaring them or spooking them out of positions sometimes. So lots of positions closed off on a Friday afternoon sometimes. And on top of that, obviously today it's month end as well. So again, longer term traders might be looking to balance either bag some profits or cut some losses for April here on Friday if they haven't already. So expect a bit of volatility later on today potentially. May or may not happen. There's not a great deal of news to move things later today. But certainly there's some data out of Chicago, there's some PMIs, and there's some inflation and consumer sentiment data out of America later on. But certainly, that's a good time to trade. So 8 o'clock GMT through to, not 8 o'clock GMT. That's 7 o'clock GMT through to about 1700 hours GMT. Now that London is 1 hour ahead of GMT and 2 hours behind server time. So server time is now 3 hours ahead of GMT for the summertime. Okay, hope that's answered your question. Where was I? CAD, CAD, big mover. I don't know if anybody trades the Swiss franc. Not many do, but it's another one that trends very well. A lot of people got scared of this a long time ago, in 2015 when it moved really aggressively. But certainly the Swiss franc is as good a trader and trender as any others. And again, a great example of the rally for the dollar in March and the decline in April. Again, another big decline here for the Swiss. The dollar against the Swiss franc. The Mr. Jordan, the head of the Swiss National Bank this morning, unsurprisingly, talked about the Swiss franc being a wee bit overvalued, and we're not afraid to intervene in the market, but didn't really make much of a difference here. We've had this continued downtrend for the dollar against the Swiss franc here, and we're under 91 and struggling with that currently. Right, guys, I'm going to wrap up. There's not many of you here. There's not a lot of action going on. Let's just have a quick check. I've got a little note I need to write before 5:30 today. So unless anybody wants to look at something in particular, please let me know, and I'll call it a day. Finally, the commodity complexes. Bitcoin had a better day today. Yesterday, it moved down under this key 53,500 level. Stronger day today. But if we look at the daily time frame, it's still very choppy. That big gap down we had last week, but it's moved over the key, back over the key psychological 50,000 level. So it remains relatively well bid, but well down from that all-time high here, up at 64,000 plus. And under that key support zone we were in as we were moving up the 58 to 60,000 area. So we need to recoup that level if we're going to go back up. So a bit of a weaker end to April for Bitcoin compared to March and early part of April. Remember, we got this big news about Ethereum as well. That moved to an all-time high earlier this week, and big split going on with Ethereum and Ethereum Cash getting introduced as well. So Bitcoin really needs to recover around about where what's that 20? Yeah, still it's really 58,000. We want to get back into that to have another go at all-time highs. But it can be very volatile, and it can do that very, very quickly as we move into May. Gold continues really to dawdle. There's no real great big love for gold, but it doesn't want to go down either. It's one of those sessions at the moment. So a bit like we had into the end of the middle of April, we're doing the same into the end of April, but we're sort of we're above the lows of earlier in the month. So the highs have got higher, the lows have got higher. So we're trending up. But now, last week or so, we've really gone sideways, having rejected the key 200-day moving average at 1790. Last week, we continued to sort of unwind a wee bit, but doesn't really want to move down and test the next key support at 1750 here, this zone here, the 1758 area. So we're still holding that, although drifting lower into the end of the month so far. So different one to call gold at the moment, but from a 20-day moving average point of view, it's still over it. It's still quite significantly over it, and there's that 1760. That's where it sits now from this move up at the beginning of April. So it's had a relatively good month, but capped at 1790. And support now sits at 1760 for gold. And finally, oil. I talked about commodity complexes. It's had a really strong month coming off today. Zoom up. So here we went down to test 57.25 into the end of March. We breached the key 60 level here, middle of April. It was a bit of a resistance level. We went to 64, we came back down, we didn't breach 60, and now we're back over 64. So 64 is a key line in the sand. We topped out at 65 yesterday, and another one, a bit like the gold complex, remains bid. The 20-day moving average all the way down there at 61.62, but relatively bid into the beginning of May. So, so gold, oil, still bid, but still plenty of action in there. As well. So I'm going to call it a day, guys. I'm going to say I've got a little note I need to write before the end of the day. So take care. All the very best. If there's no final questions, I will call it a wrap. It doesn't look like. Let me just go to Facebook. Is it Facebook questions? I don't know why the Facebook site didn't load. Something I've obviously done wrong. Never mind. Okay. So take care, everyone. Have a great weekend and stay safe. All the best, everyone. Bye-bye.